Hi, welcome to the Market Alert for Monday, 3rd of April 2023. So banks bust as big tech booms in quarter one. Gold and crypto soar as dollar dumps. Well, different story overnight. The dollar's actually moved sharply higher, reversing this news from Friday. Stocks and dollar and bonds end quarter on high amid month end flows. And finally, stormy bull. Pain is huge as people are too damn short. So a lot of people short getting squeezed by the big funds during the last week, as we've seen the market relentlessly moving to the upside. Economic news today, we've got OPEC meeting. That's interesting as well because the price of oil has actually moved higher overnight as well. And we've got ISM manufacturing. That's forecast to come out just slightly lower than before. And then the ISM manufacturing prices also to show a slight drop or fall. So let's get on with it. Let's have a look at Friday, see where the market's traded, kick off with the Dow and then work our way through to the metals. So in the Dow, we can see that again Friday the market charging to the upside up to the 89% retracement that we had drawn in. The market seems to have run into a bit of grief at this level. As can be seen, we've had the first part of the overnight session and then we've kicked off with the main event, where you can see that we're still below the 89. But don't be deceived by this because if you look at the overnight market first, you'll see that we're still sitting at Friday's high. All we need to do is to actually breach this. The market's sideways, despite being red, it's starting to turn green and we're oversold and we're starting to buy in there at the 20 bar moving average. We've also got a crossover in the oscillator as well. Just as we did on Friday, down at the low. And you can see there the market moving sharply to the upside, maintaining that momentum to the upside. And Friday's start to finish trade there was 475 points, all driven to the upside there. So the market continuing to move in this direction. Let's just have a look at the average moves for the last week. This is the week's trade up until Friday, and the average move was 200 points per day for the Dow there. So decent moves. If you get in one direction, you know that it's going to move either a couple of hundred or more points for the Dow. That's the average, of course, over the week. Like I say, Friday we saw 475. So again, it's just knowing that if you're in a long and it's moving nicely, it'll tend to go in that direction, take out the highs, etc. And that's the sort of thing. If you know the numbers, you know how long you can potentially stay in the trade as well, whether it's an all-day trade as well. In the implied volatility for Friday, this moving down as well, making a new low we haven't seen for a while, 1527, a lot lower than the 42 that we've seen in the last few weeks, 13 and 467 and 1504. So the options traders on Friday seem to be quite content that the market is going to continue to the upside. That said, the implied volatility is a forewarning and an indicator of a future correction coming to the market. You can see there prices moving up in the Dow with the implied volatility moving lower. They're polar opposites. And once the market runs out of steam and the implied volatility is down at the lows, then you will get the correction in the market, if it's allowed, of course. So in the German DAX on Friday, we see the market trading up through the 89. We've got the 1507, a very important area that needs to be taken out. It's been a while since we took this out, and it goes all the way back to March the 7th, beginning of the month. So the market getting back towards that as I record. In the 30-minute chart, the market trading down to the close, and the 50 EMA, which I mentioned in Friday's market alert, how important these areas are, with prices moving back to the upside, with an average range, or high to low actually, for Friday was 160 points, so dropping down slightly. If we go back to the daily chart, the average range for the last week has been, let's have a look, 123, so just over the average during Friday there. 5-minute chart for the DAX. Let's have a look, see what happened on Friday. I can see the market just coming through the close there. then finding demand, oversold, crossover, market coming back, retracing, and then off we go and getting back through the close. They like to get the market back through the close and the previous day's high, which they did. Had a bit of a struggle to begin with, but found support at the 200 MA, and then once through that, the average is expanding and the market continuing to move to the upside. Overnight, bit of weakness. We traded down to the DP with a spike down. We saw them buy back, and now we're retesting this level, as can be seen here. So all we need to do is to move off this, head back towards the high, and then towards the 15,707 level. May get a shakeout to begin with, which seems to have been a pattern over the last few weeks. Trades for the week, 811.62, 2.38 on the profit factor, and we've got 57.43 sort of ish. Doesn't really matter, to be honest with you. So yeah, a reasonable week. It was a tough week, but a reasonable profit there for the week. And in the S&P 500, the market trading up to 78% retracement, just holding overnight there at the moment. Decent move to the upside last week for this market too. You can see on Friday, again, that how important the close is and the low, the market coming off this. We're now sitting just above the DP. We've got the high above with the close as well, so double resistance there in order to move higher. In the FTSE 100, also a decent move during the week. Let's just have a look, see what we had from low to high. Up 485 points, so a good move there, but a good recovery. Stuck at the 62% retracement and the 50 EMA though. And in the 30-minute chart, you can see Friday's move. Guess what? Coming off the low and the close. Get your retracement and off we go. Overnight, the market's taken out the high, unlike the rest of the stock markets, and also trying to bounce off the close to get back above the high and then continue higher in the daily chart. And in the currencies, GBP, GPY, down on Friday, very narrow range, down on the overnight, but bouncing back, trying to get back above the 5-bar moving average there. Friday's session saw the market moving higher. The high then became support, moved the market back. However, once it retraced, good 89%, the market then reversed after becoming overbought and then made its way down. Gapped higher overnight at the DP, found a bit of resistance and has moved down to guess where, the low, and then is now finding support at the close. In the pound, also we're quiet for Friday, down on the overnight. The dollar's up, 62% retracement there. And in the 30-minute chart, again you can see that the high causing this market a bit of grief, and the close, market coming down, trading back to it. Again, 89% retracement, trying to come off the DP there, bouncing, but then closing back below the averages. And then 200 is an area of support, but then that fails overnight and we trade straight through the low with some aggressive selling, and prices then find some support at the moment, just trying to get back above the S1. And in the US dollar, we can see this moving strongly overnight, and the reason for this is this oil surge in early trading after OPEC surprise, unipolar world challenging production cuts. The kingdom was sending a message to the US that it's no longer a unipolar world, and that's the rest of the article there, talking about the details behind this, and that's why you're seeing the dollar move higher overnight. Again, that's sort of trying to pump the dollar when the dollar is dying. And if the dollar's higher, then the metals are lower, so we're getting crushed overnight. You'll see the 30-minute chart there where it's fallen out of bed already. Trading below the low as well, just going to watch the S2 and the 200 MA there. But on Friday, coming off the DP, nice move to the upside there. It'll come back, but it's at the moment with that sort of news, geopolitical news, then there's always a flight to the dollar, the world reserve currency. Not that it's worth a fat lot, and it's certainly the petrodollar is dying, that's for sure. Same with gold, this also down on the overnight and the 30-minute chart. Again, you can see how it's been falling out of bed over the last few hours at the lows, trading straight through with a big bar, trying to find some support at the S1 and now the S2. And finally, gold-silver ratio. Silver being crushed more than gold, and that's why you're seeing this moving back to the upside. But it's been a good move for silver over the last few weeks, but time for a breather. And if this geopolitical nonsense continues, then we're going to see the dollar strengthen, because that's how it works. Okay, that's it for this one. Oh, actually, while I'm thinking about it, this week we're seeing a lot more economic news. We've got the non-farm payrolls out on Friday, if I remember. It's going to be a bank holiday in the UK. We're heading into Easter, but yeah, we've got the non-farm payrolls at the end of the week. So keep that one in mind. ADP on Wednesday as well at 1:15, and JOLTS on Tuesday. So that should add a bit of interesting volatility to the market as well. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.